Bet shares closing back in on all-time highs, now just over 1% from the record it hit back in February. The chartmaster says it may be due to pass that mark and then some. Carter Worth joins us with a look at Alphabet. Carter, what do the charts tell you?
Hi there, sure. Let's get right to it. I have a couple tables that might be relevant. The circumstance that's interesting, of course, is so many stocks having sold off marquee big names, Microsoft, NVIDIA, Meta, you pick it, Netflix, Oracle, that sold off with the tariff sell-off, have all recovered all the losses and made new highs. But of course, Google has not. You'll see here in this first table that Google was the worst on the way down, losing some 32% from its February pre-tariff sell-off peak to its April plunge low. Now, the ricochet, second table, depicts the circumstance from the low to present. And obviously, Google's had a tremendous move, up 45%. That's epic, but so has everything else. But the third table really tells the tale. Google has not, made a new high, whereas the S&P index 500 has, the NASDAQ 100, big tech names, again, like Microsoft, NVIDIA, Meta, Netflix, you pick it, even the tech sector overall or the communication sector. So this is either the opportunity or the problem. I think it's the former. It's the opportunity. Let's look at two charts of Google. First, no lines, no drawings, no annotations. Second, just a simple line or two to the penny, having moved some 45% right back to its former high of February 4th. My thinking is, as has been the case with so many other stocks, Google exceeds its pre-tariff sell-off, breaks out, and makes a new high.
And you mentioned it a couple times here with that one, but Meta, you and Dan were also talking about that one earlier. What do you see here?
Right. Well, Meta, we might have charts as well. Meta did break out, right? And it's almost always fundamentals that cause a breakout. In this case, it was earnings. It was on the 30th of July, and the stock moves above those well-defined former highs. And now sort of backing and filling, you'll see in the next iteration and perhaps the third chart, that the stock is, after breaking out, a little bit dull, a little bit lackluster, but that's normative behavior. And any dipping, further dipping from here today, a bit of a down day, I would say that's weakness to take advantage of rather than weakness to back away from. So I'm a buyer of Meta, it having made the new high and now affording an opportunity to pick up more or initiate if one doesn't have any.
I know you sent out a note on Tesla. We were just talking about it with Phil. What do you see in Tesla here, Carter?
Yeah, we just did a poll. We do these from time to time. Tesla is basically sitting, at the apex of a formation. Some people call it a triangle, some people call it a wedge, but it represents equilibrium, a perfect standoff between bears and bulls. And this is how people have responded. Institutional investors, so it's the individual portfolio managers or long short, long only, economists, what have you, have 60% are positive, calling for the up arrow, 30% negative. It's different on the individual investor side. Only 43% are positive and 57 are negative.
Carter Worth, thank you so much for joining us with those three names, Alphabet, Meta, and Tesla. Dan, I'm going to let you dig in since you and Carter were talking about Meta.
Yeah, Meta's the most interesting of all those names to me. If you think about it, when he's talking about Google, it's gotten back to this point, for it to break out, I think that a lot of things have to happen, probably from a fundamental standpoint. Well, those fundamental things have already happened with Meta, right? And it already did have that breakout. It's consolidated above those prior highs. I know a lot of folks have kind of relied a little bit on that valuation that had been favorable until recently. It's not that favorable, but I like it from a technical standpoint. I like a lot of things that they're doing. I like the fact that they keep trying to fix their AI business. They're on their fourth, restructuring of that right now. Sooner or later, they're going to get right, and Zuckerberg keeps spending hundreds of billions of dollars on that, build out hundreds of millions of dollars on hiring people.